Let me start the recording. And this session will probably be really, really quick because I don't expect my charting session to go that long. But someone did ask me to just have a video where I just charted, so I think that should be pretty easy. So let's go to, I don't know, let's go here. Needed to redo my chart anyways, but just remove everything. And what I like to do usually is I start from any strong low or strong high. In this case, because I'm using data from 2022, I'll just start from the bottom here. The first thing usually I would do is draw some extensions after I analyze like just price action. Um, Usually I do the analysis of price structure in my head. So whenever I post charts, you don't usually see like these boxes that I imagine in my head. So something um, like this. These are probably the most important levels that I have whenever I just visualize some kind of box. Um, pretty pretty simple rules here. Generally, you just want the box to just be within some kind of range, and then you can gather some pretty important levels there. But generally, at least what I see for ES right now, we are either very bullish or very bearish, which is the great part. This is like the main reason why I decided to start the small account challenge where I did, right? Where this criteria where I said, okay, if we manage to hit like 58, 57 ish within like 1 to 2 weeks, then I assumed that we would probably have some kind of extended volatility similar to whatever was happening here. Because generally, what I've found is that after every correction, after every major correction, I should say, that the impulse following the correction always is more impulsive than the previous. So if I like, I've talked about this before. Like if I go on SPY, where I feel like I talked about this like a few months ago, but generally, like if we just look at the times we've corrected, the impulse following it was just steeper than the previous. Right, this was like 36 degrees. This was like 50 after we corrected here. This is what like this is like 81 degrees. Corrected here, and the percentages are relatively steeper than the previous. So when we had this kind of corrective move here, I mean, just looking at it from a monthly perspective, we bounced at a 90-degree angle in a month, which is absolutely absurd, right? So coming off, I mean, obviously there has to be some kind of point where this has to stop, right? Because we can't just keep getting steeper and steeper. But at least what my theory is that the volatility will probably continue to be as strong as like the times we kind of did these kinds of moves where we moved like 10% overnight. Not 10%, sorry, like 4 or 5% overnight. Right. So with the volatility comes a lot of opportunity for profiting off of options. Generally, I moved to futures, right? Because a lot of people ask why I moved to futures. I'll answer that by saying it's a lot more consistent to just be profitable over futures, right? Because there's no data, there's no thinking, really. It's just you have a price target, you have a stop loss, and you can pretty easily surmise your risk tolerance because of that. But I think it would be pretty irresponsible of me if I didn't take advantage of the oncoming volatility that I think will happen. So maybe there'll be some like generational wealth that'll happen, maybe not, right? But I do expect some kind of things like this to happen again, where we do just move several hundred points overnight. But anyways, going back to how I would chart, right? After finding these ranges and finding these kind of liquidity levels that I mentioned, a few things I like to do is go on the higher time frames, like the weekly or the daily, and then, like I mentioned before, I go on to find a strong low or strong high. In this case, usually you're going to be looking at strong lows, just because there's just the market is designed to go up, right? So this is probably how you should be looking at things. But anyways, just drawing some extensions. One here is probably what I would have. And these extensions I've had on my chart since 2023, like the end of 2023. But here's another one. And then I think I had this one as well. Alright, gets a little messy, but the important part here is that you're able to see the confluence behind certain levels. Generally, obviously, the more levels there are at a certain area, the more significant it will be. And this is the weekly chart, right? So while you're trading on the daily, it's important to note that the level you see on the weekly chart will never have an immediate reaction, like as soon as the level hits at that certain time of the day, right? So what I mean by that is like here we can see on the weekly that we do eventually reject at this 2618 level, right? This 200% at 59.87ish. But if we drop down to like the 30 minute or the 195, right? The rejection doesn't happen immediately, so you can't necessarily just short it as soon as you get to that level, right? Because I mean, we can just see it here, right? Just the relevance behind these levels, and then see how long it takes to react. I'm using weeks worth of data, so I can't expect the reaction to happen immediately. And I think that's an important distinction that a lot of people fail to make, right? Because they draw these extensions and then they enter a position right as it reaches that level, and they wonder why, like, oh, why is there no reaction? But that's generally also why I tend to trade on the higher time frames, like the 195 minute, because this is, to me, this is the lowest time frame I can go where I can react to 1 to 2 candles, or I can react to a pattern, because this is the lowest time frame that shows the highest statistical significance to me, and everything in trading is based off of your own psychology, I would say. So that is why I use the 195 minute. But anyways, I like to have 2 separate charts. One where I have these kind of weekly extensions. Generally, like they're pretty important. But what I like to do the most is that I'd like to analyze the previous 3 trends, right? So in this case, I'd only be really looking at here, here, and then maybe like right here. Right? So these kind of trends. So this is about what, like a year's worth of data almost. So let's go to the second chart, right? So one would be the weekly chart, and then this would be like the lower time frames. So I can just get rid of this too. Right, so applying that same concept, right, I just draw some extensions. I go from strong low, strong high, to the next high. Actually, I think it's here. I think this is what I decided was the extension. And then I like to see here as well. The reason I have this extension is to just see where, if this is the corrective algorithm, if I'm looking at it in the sense of the corrective algorithm, rather, I like to see if the low ended at some kind of significant level, and in this case it did end at a pretty significant level, being the 3618. Does that necessarily mean that we are finished with the correction? No, it depends on a lot of other things, right? But generally, things tend to end at 618s. So this is good to see if, and this is one of the reasons why, like if you watched my previous video, why I thought that the low was in, or at least the local low for the next couple of months. But seeing as the impulse has kind of shown itself, right? I think the last video I made was around here, where I still kind of assumed we were coming up to like this 5828 area. Did I think we were going to come up to this 6,000 level? No, not really. Generally what I was thinking was this was some kind of like corrective move up, right? So in terms of Elliott wave theory, it would be like some kind of 3-leg move up. Generally, this third leg does not extend past like the 100%, right? So this 100% would be here, right? Because we're looking at the overlay of the A leg. But I mean, it's kind of nearing that. The 1272 is not so far fetched, right? And in this case, there's a lot of confluence here to kind of see, okay, well, this C leg, right, this inner C leg, kind of also ended itself relative to the first level, right? So this 1-2, arbitrarily just throw this on, right? This fifth leg maybe, if this is the end, ended at the 1618, which is also is pretty similarly close to the 1272 of the major correction, or the overall move rather. So this is to me pretty indicative of some kind of larger correction. Now, all I'm really waiting for at this point is for some kind of range to break on both NQ and ES. I was hoping that on Friday or Thursday that we would kind of confidently close below this little box here, but that didn't happen. Right, so in this case, the structure is still being held for bulls. What I really don't want to see is another break of this high, because if there is a break of this high, then my bias is probably going to be wrong, where in the sense that we aren't in a correction, right? Because I think if you've been following me for a while now, then you would know what this 1382 level means. And generally, there's a higher chance of us just coming up to this 1618. Does that mean there's not going to be a correction afterwards? No, there's probably going to be another pullback, but I would have to kind of redo this count at the bottom here. And I really don't see how this can be seen as anything but a 3-wave move, because there's just no way. But anyways, yeah, so I'm pretty much patiently just waiting for a breakdown of this structure on NQ, because once that structure is broken, it'll be really, really easy to short tech in particular, because NQ structure is relatively weak compared to ES. If we just think about it in terms of like foundation and ranges, then there's a lot more ranges on the way down for ES, rather like if we compare it to NQ, where things relatively moved in a straight line. Just going back and forth here, it's relatively similar, but to me, there's a lot more strength in ES. But looking at it right now, kind of seems, if we don't break above like 59.19-ish, 59.20, I can't really see us going much higher. I think if we just draw a retracement here, 19 is about like the golden zone. I think we'll probably test 59.19 overnight into Tuesday rather, and then that is when I'd probably lean into the shorts. What I'm mostly confused about is like why Bitcoin is so strong. Generally, I was thinking like back in like April or March, I thought Bitcoin was like a leading indicator. Generally, like what it did over a day would be emulated or reflected in ES and NQ in the following like 2-3 days. As like a general rule of thumb. But now that we've kind of just continued pushing to 110-ish, that definitely has me questioning the strength relative to ES and NQ. But what I would hate to see, or sorry, I shouldn't say hate, but this, while it looks bullish, right, we are still under this 1272 and this bigger 5618 on the monthly. So I did mention it a bit in the chat, but this monthly candle is very, very, very important. And this kind of ties into my previous thought of where you cannot expect a reaction immediately, right, to this 1272 level, because this is years worth of data, right? So while it looks strong right now, and we did get a kind of reaction here at on the 22nd of May, but if we think about it as a monthly candle, generally you see a level you see a candle come up to this 1272, and then the next candle it will come down, right? So if thinking about it like that, then I'd probably know if I'm correct by the middle of what's the next month, June? Yeah, by the middle of June, right? Because at that point, then you can kind of surmise whether or not this level has been reacted to on the monthly. If we close above, then obviously it's going to be bullish, and we'll probably come up to like this 128 area. But doubtful that will happen. But in any case, I will always react to some kind of candle close, because I think a lot of what people do mistakenly is look at a candle as it's forming and make a decision off of that candle, like without it closing yet, right? So you'll get faked out every single time. Or not every single time, obviously, but more times than not, you'll get faked out. But anyways, so these are like my current levels right now. I kind of did expect NQ to push up to this 270 area overnight. I talked about it in the chat room a little bit. I know someone asked about it in the chat room, but because we closed above like this 210 level, which is one of this green line here is one of the levels I gathered from this range stuff that I do. But yeah, we closed above and then came up to test this liquidity area around 270. So this 270 level is 270 to 320 level is very, very, very important. Because if we do manage to break this level, I think we will come up to at least like within this area of like this 470 area. But this level is what I consider to be as the bull gate for the overnight session. But in terms of pattern recognition, a lot of the times we close below this level, like we fail to close above this 328 level, we do tend to reject. But that doesn't mean that the rejection is very strong, because most of the time the support is found near this 240 and 178 level. But with my bearish bias and this kind of like this golden zone area, maybe, you know, if we fail to close above 320-ish, we'll probably just take a short down. I think the confirmation would be any close below like this 130 area, and we'll continue to move down to like this 620, 20.6 maybe. But once this kind of move down happens, then first thing I would do is draw an extension from here to here, or to wherever this high is. Assuming that this is the high, then I'll probably target like 20.256. But yeah, reason I don't target the 100% is because there's no structure here. So structure always takes precedence over fibs now. But that kind of goes over my ESNNQ thought process and my outlook for the next 2 to 3 months, I would say. If you had to ask me like, oh, where do you think the market will be by the end of the year? I would love for the market to come down to like 16K. But I think July I'll probably do another video in July similar to this one. Because at that point, we won't be in this range anymore. We would have made a decision of us closing above this 22K or below like 20.1. Yeah. Any close below 20.1 on the monthly would indicate a very, very strong structural break, and we'll probably come down to test this liquidity down here at like 16K. But going back to Coco, wanted to talk about this because this is like the most exciting chart that I've seen in the last year. I entered short around like 9.9-ish, like 10.4. And I mean, my first price target is 9,083-ish. But to me, this screams like it wants to come down. And generally, how I came to that decision is just from this structure here. To me, this is nothing other than a triangle. And for Elliott wave theory, a triangle can only ever be in a fourth wave. Right, so what comes after a fourth wave? Well, a fifth one. And then we have to kind of, from that information, we have to kind of assume, okay, are we is this the end of the fifth wave? Right? Is this single push the fifth wave, or um, is this like the beginning of a larger fifth wave? Generally, looking at the structure as it is right now, very doubtful that we are in a larger fifth wave. But regardless of that fact, if we think about it in two ways, one being a larger correction being this green ABC, or a larger fifth wave being this white line here, both kind of counts. Right, if I change this to white, both counts indicated this was a local top, this 11.3 area, right? So whether you're bullish or whether you're bearish, in terms of Elliott wave, both counts are telling you that it's coming down, right? Which is a very powerful thing, right? Because those are two opposite forces, but they join together, right, to point towards the same direction, which is very rare in Elliott wave, because if you are familiar with something like this, or at least like Elliott wave theory, then you know that if you gave this same chart to 100 different people, you'd probably get 100 different charts. But in this case, I think that number kind of shifts a little. Maybe like 60 of those people will have the same chart, which is very, very rare. Right, so in this case, this is like an AAA plus trade for me. I'm going to size in pretty heavily. I think I'm already sized in pretty heavily right now. And I don't plan on taking profit until like 90.70. And I think, I'm up pretty comfortably now, but every point is $1, or every point is $10 on Coco. And so ultimately, I think I would love for us to come down to like the 6,300 area, which is about like 40K per contract. I wish there was a Coco equivalent on the regular stock market though, but there isn't. But I think that's good. ASIM wants to see the gold chart. I don't have a gold chart, I don't think. If I can find it, that'd be nice, but let me see if I can find it. I know I did a count before, but I might have gotten rid of it. Oh, no, maybe here. Okay. Apparently I had 314 as the target. So that looks pretty good. Looks pretty good. Don't know when I charted this, but I've been long since 211-ish. I went long in two places. One was here, and then when we kind of based around here, this is where I also went long. But yeah, looks like if we can't get above 314 on the monthly, then I would say we probably come down to like 275, and that is where I would probably look to long again. Like if we just throw an extension onto here, assuming that this is the top, then like you can't really draw an extension yet, right? Because we don't know where the top is for this kind of move up. Maybe this isn't the top, maybe we just kind of close above 314 on the monthly and then keep moving up. But as of now, like let's say arbitrarily this was the top, then I draw an extension and look for the confluence, and it kind of looks like there is an area at 274. Is it strong? Not really. 250 would probably be a good area to buy. Yeah, it's like this 254 area on the monthly has a lot more foundation than anything in between here. So, but yeah, that's my thoughts for today. I will end the live here, and I will see you all tomorrow.